Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today. April the 4th, job openings came way lower than expected, 9.9 million instead of the 10.4 millions, and job quits came higher than expected. So basically, openings are tumbling below 10 million in February, well below expectations, and it's a sharp drop of 632,000. And basically, it was the first time that vacancies fell below 10 millions. This is good for the market. This is good for the Fed due to the fact that, well, people are also seeing less vacancies, less openings, so less opportunities to improve their jobs. And also from the business sides, they are putting less openings, so they are demanding less workers. So basically, if they hire anyone, they will put less salaries, less wages, and less income for the new personnel. That's a good thing, and that's something that the Fed are watching because until now, until some months ago, basically for each person, they had 2-to-1 ratio of job openings. So a lot of people were changing jobs, increasing pays, and the demand for workers was super high. That's one side of the equation. Another side of the equation is job quits. So people are quitting their jobs. This is something relatively bad for the market because if people would like to continue in their jobs and feel the pressure of the economy, they will just continue the working to the business. But let's see what happens with this kind of news. Factory orders minus 0.7, estimated 0.5 in the negative. The previous was -2. So factory orders month over month continue lower, and excluded transportation was lower. So kind of decent news right now, but I think part of the reasons we are seeing weakness on the markets, it's due to the fact that if we check the probabilities, we have again an imbalance to the flat. This is 57.5% probability for no hike in May. And probabilities are looking lower, not 5 to 5.25%, but 4.75, 5%. So analysts and investors are already starting to see the Fed pivoting. Way and way more reasons to start saying, okay, we are seeing signs of slowdown on the economy, of cool down. So maybe the Fed will not hike the next meeting, or they will not be at terminal rate for so long. Remember that average, the Fed are at terminal rates around 6 to 8 months. So from now, April until September, October for sure. If we check September, markets analysts are pricing in 4.5. So 25 basis points interest rates cut already. But remember what Jerome Powell said, and they show in the dot plot for expectations outlook on the 2023, no interest rates cut until 2024, and they will remain at terminal rate for longer. So what happened then in the markets? You can see we were kind of pushing right into the open, but remember, we have to always check the daily. The daily has the key to why we are seeing weakness. We had this blue dot line, 13,311, that's last week high. We broke this pivot. Yesterday we put a nice bottoming tail, bullish, but look at how long we are already up here. If we check basically the US 100, this is the Nasdaq, just seeing some profits and ratios up here. Do you think that this ratio, this price up here for only just 4% is bigger than the risk of falling at least to the 200 moving average, 7%? I think, I mean, you can do whatever, but I think ratios, risk reward up here for bulls are no longer justified. I think a lot of people are starting to cover positions and start selling. And at the same time, I think bears with some kind of economic data on their side, they are trying to push the market down. So I think this is more technical than fundamental, because on the fundamental side, I think we are seeing signs of inflation weakening, but for sure we are seeing lower lows, lower highs, and the trend is clearly down. We have still also this big resistance at 13,250 intraday, and the point of control is just sitting above. So pre-market low remains right now the break point. Right now we are starting to put some kind of nice higher low to see what kind of strength do we have. I'm breaking the EMA, but I don't think Nasdaq is going to end on the green today. And if we do so, if we don't finish the day in the green, we just have to see this kind of popping tail as a sign of reversal. So the sentiment, the overall sentiment will change, and we just have to be prepared for a pullback. I think pullbacks will be met by demand at some point, and I think that point is most probably 13,000 for sure. I think around on the daily we have this pivot at 13,068, and we have also the previous resistance is now support around 12,900. So around 12,900, 13,000, I expect some kind of pullback, and maybe bulls starts committing again, depending on the fundamental. But also remember that this week we have big economic data on Friday. Tomorrow we have ISM non-manufacturing, Thursday initial jobless claims, and on Friday it's not a complete day of trading, it's a bank holiday, but still we have one of the most important data of the week and of the month: unemployment rate and non-farm payrolls. Look at the expectations. We are expecting flat unemployment and way lower payrolls. If this is good, if this goes as expected, I think even we are forecasting in this side, we are forecasting way lower unemployment. So that might be an issue. But what is true is that this is going to fuel the move. Either bulls again pushing the market up for continuation after the pullback, or bears just pushing the market down and just putting a lot of pressure on the daily for what I think can be a retest of the 200. Last week low at 12,600 might be also pivotal, but this kind of move until here, it might be possible if that fundamental is not good, not follows what the expectations are for the Feds and for the inflation. That's the kind of forecast and the kind of move that you have to really start thinking about. I think that today is quite clear that we are seeing some weakening after a lot of strength. That doesn't mean that we cannot continue higher. We need some kind of rest in order for the move to gain a healthy move. And regarding crude oil, that we were super worried about yesterday for this gap of 6 or 7%, look at this. They are feeling the pressure. This is the 200 moving average, the simple moving average. So demand destruction is not working as OPEC Plus is expecting. Well, that's their issue. Dollar, however, is seeing continuation to the downside. Look at this. Push, consolidation, structure, continuation to the downside. The next value for the dollar might be 100. And dollar is continuing seeing weakness not only for the US economy, but also for China, geopolitical trading, overall trading. economics that say that maybe the dollar is not as strong as other currencies in order for them to trade big assets. This is another world, but what we can see is just dollar weakening. The 2-year yield is also in the red. After today's job openings and the change on sentiment, yields are really selling off. The 2-year yield is selling off -3%, and the 10-year is -2%. Also, yields, interest rates futures, for September 4.6 and for December 4.2. So they are continuing betting against the Fed by saying that bonds market are saying you are going to cut this year not one time but even 2 times. The inverted yield curve finds some support due to the fact that the 2-year yield is selling off more than the 10-year, but I don't think we are out of the woods yet. We have this big rejection, and this is just, we are range bound. We don't know if we are going to enter recession even deeper. We are going to be okay and going to follow the path of no recession. Remember that banks are also quite in the red. Banks are feeling the pressure of the US economy and the Fed interest rates, and the credit is going to dump. Credit is no longer to be so easy for people. So apart from the pressure from interest rates from the Fed, banks are going to put a lot of pressure on credits, loans, mortgages, money lending. And that is going to put a lot of pressure on households, families, and the overall economy. It's not only the Fed, but also the fact that the banking sector had a big issue, and basically the Fed had to support that sector. Apple, very flat. Let's do a quick review. I think part of the reason why we are selling off is not due to a specific stock. Tesla is the most one, the bigger in the red, -1%. But I think it's overall due to yields, and traders and investors are seeing that the economy might be sick. We are approaching this descending channel. We might see some kind of push higher, but I don't think we are going to be like yesterday, this kind of move. That would be insane. Anything can happen, but I think we are going to see a red day. Let's see what happens later. VIX is going up 5%. So VIX is chilling out still below 20, but it has a lot of room to really push the volatility up on the markets. Don't miss the VIX. And finally, gold. Look at this. Gold is smelling the lower interest rates throughout all this year. We broke this pivot at 2000. 2000 was rejected on April last year, and we didn't trade above that since April last year, and the previous one was August 20. So this kind of move is really bullish. I think this is an asset that a lot of people really love on lower interest rates. And now that the dollar is seeing a lot of weakness and a lot of pressure to downside, I think gold futures are literally flying. If you can see this, until yesterday we got 10%, and now we have another 5% almost to really consolidate above 2000. This is big, guys. I'm really glad that some of my friends are trading gold futures and are doing pretty well. So I think that's all from my side. We have covered a lot of things: overall sentiment, Fed, economic data, technical analysis, other markets. You really have to understand all these situations, all these nuances to really trade the markets as you are supposed. Thank you for your time as always. If you like this video, you found out this video helpful, please support the channel by clicking the like button and subscribe to the channel. And you will receive notifications when I upload new videos. I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always. Remember that we are now closing lunch hour, 1 p.m. There's still a lot of hours until the close. Yesterday we really had a lot of action, but don't be naive. Don't be naive. Just be patient. If you are short, take your profits. If you are long, I think we have to really step out, step aside, because for the bulls, we have to be patient for better opportunities, I think, at the end of this week. So discipline and risk management are key for your success. Stay safe, everyone, and see you tomorrow.